Welcome to the Fear and Greed Afternoon Report for Thursday, the 28th of July, 2022. I'm Sean Aylmer. Every afternoon, we've got the 5 stories that happened today that you need to know about. Let's jump into it. Story number 1. The US Federal Reserve raised interest rates by 0.75 percentage points this morning, the third increase since March and the fastest tightening cycle since the 1980s when inflation was in double digits. But Federal Reserve Chair Jerome Powell said there was a weakening of activity in some sectors, and he doubted that the world's biggest economy was heading into recession. The initial response from financial markets was that further rate rises may not be as severe as expected. As a result, Wall Street jumped. The broad-based S&P 500 rose 2.6%, while yields on US government bonds fell. That, of course, set the tone for trading locally today. And that's story number 2. The S&P ASX 200 finished up 1% today to 6,890 points. There were some very strong performances. BHP and Fortescue both ended up more than 2.5%. Macquarie jumped 3% after outlining a strong June quarter, while the 4 major banks rose. The energy groups Woodside and Santos were also up. They both jumped about 1%. Other big caps to do well included South32, Goodman Group and WiseTech Global. Wesfarmers, Coles, Transurban and Telstra all went backwards, while Computershare was down 3.5%. It was another incredible day for buy now, pay later groups Zip and Sezzle, which dropped plans to merge earlier this month. Zip shares gained 20% today, which was about the same as yesterday. Shares in Sezzle doubled yesterday before a trading halt was imposed. They started trading again this morning and gained a further 40%. Mind you, both stocks are still well down from their peaks, but there's no real news to be pushing this price action. Atlas Arteria was the worst on the day, down 6% after fund manager IFM dropped plans to acquire the road toll operator. Story number 3. Federal Treasurer Jim Chalmers provided a budget update today. He said the 48-year low unemployment rate will edge up towards 4%. Inflation is heading towards 8%. Interest rates are on the way up. Economic growth next financial year has been downgraded, although it was upgraded slightly this year thanks to high iron ore, gas and other commodity prices. And Australia's budget deficit for the last financial year won't be as big as expected thanks to commodity prices. But Dr. Chalmers said the nation's finances have structural challenges and untreated inflation would wreck the economy. Story number 4. Fortescue Metals said iron ore exports beat analysts' expectations again in the June quarter, but it warned of a big jump in production costs. The iron ore giant wants to set a 4th year of record export volumes after shipping nearly 50 million tonnes of ore last quarter. The challenge is around costs, and also the group is ramping up spending on its clean energy division. Fortescue boss Elizabeth Gaines said she was confident in the outlook for the Chinese economy despite lockdowns and worries about the Chinese property sector. Fortescue is still experiencing strong demand from that economy, she said. Her comments echoed those made by Rio Tinto on Wednesday evening. One challenge for Fortescue, Ms Gaines said, was labour shortages in Western Australia. That is becoming a very common story. And finally, story number 5. Kogan.com was a pandemic-era star performer. But times have changed and last year's net profit for the e-commerce group fell by 40%. But there was sales growth and the final quarter of the year showed strength. That helped push the group's share price up more than 50% today. Mind you, in late 2020, Kogan's share price was almost $25. It's now under $5. Founder and CEO Ruslan Kogan said as the economy changes, people will alter the way they shop, and as better value is needed, Kogan.com could benefit. That's it for the afternoon report for Thursday, the 28th of July, 2022. Michael Thompson and I will be back tomorrow morning for the Friday edition of Fear and Greed. I'm Sean Aylmer. Enjoy your evening.